You've heard of refinancing a mortgage, but what about refinancing an annuity? Old contracts with low rates can drag down your growth and income potential. Today on Financial Fast Track, we're breaking down when it's smart to trade up and how to do it tax-free.
You are moments away from finally getting the inside track on finance.
You've saved, you've done all the preparation, but when it's time to execute, you have to shift from preparing to performing.
This is the Financial Fast Track with Tod Long.
What we're going to do is take the guesswork out of financial planning for you.
Making more momentum with your money.
It's a good thing we have somebody in the fast lane on the fast track for us with our finances. Welcome into the show. This is Financial Fast Track with Tod Long. I'm Jackie Selby, and Tod is of Long Financial Services. We were just talking about keeping ourselves in shape. You were a professional athlete, a collegiate athlete, and it's really important that you don't give up halfway through, huh?
Oh, that's absolutely true. I was telling you the story is like when you come back home, when you start to age, you tend to stop doing stuff. And no, it's not always a good thing to do with your body. So I tend to try to keep it. I told you specifically, I'm trying to delay aging process as long as possible. And by doing that, I'm working out every day, not every day, 4 days a week at least, cardio, eating healthy, all that kind of cutting sugars, all that kind of jazz. It's highly important for longevity. And I want to be here on this earth for as long as I can.
Sure, because when we're younger, we have a lot more energy in our cells, as they say. That's the big study now, the study of the DNA and all, the study of our blood. And, it's all has energy in it. And we kind of get a little bit pooped out maybe by the world. And so we kind of give up on it. But I was thinking on today's show, it's a good idea not just to keep up with your exercise regimen and making smart choices about your foods and things, but also keeping up with maybe what you have in your financial products and maybe what you have in that drawer that you guys open like once every 5 years and look into it. Yeah, I've got an annuity and I got it in the 90s or I got it in the 2000s. But what fun is that and what good is that in today's day and age when there's so many changes to do with products like that?
Yeah, absolutely. Annuities have evolved considerably since the 90s, since the 2000s, since you probably got something, you mentioned you opened a drawer and boom, there's lots of paperwork. One of those are annuity that you got in 1993.
Springing out, yes.
Exactly. I mean, just like with the rest of the financial world, everything's going to change. Just like with nutrition, we just talked about it, everything changes. Rates changed, crediting methods improved, companies introduced better features like higher participation rates, bigger bonuses, more flexibility in income riders, et cetera. So when clients have an annuity 5-10 years ago, we often find that their contract's performance has fallen way behind what's available today. So if you bought annuity and the rates were 2-3%, and today you can lock in 6 or 7 or 8 and sometimes even 12, that's like finding extra horsepower sitting under the hood.
And we like finding some extra horsepower under the hood. And like you said, things change. I was just thinking that nutritionally, back in the day, people were drinking these shakes, morning shakes, right? Where it's just a powder or whatever, or, breakfast this, you just add milk to it or whatever. And it's full of sugar.
Yeah.
And we thought, hey, that was healthy. I lost weight that way, right? My sister keeps trying to do this. Anyway, and it doesn't. It puts weight on you because it's pure sugar and our metabolism has changed.
Yeah.
Well, that's the case with the annuities. My golly, there's so many cool, neato ways to use this kind of a saving and growth. Is it a what do you call it? An asset? A savings vehicle?
Well, it can be an asset. Yeah. I when I talk to clients who have their assets and 401ks, 403s or whatever, and they move those assets to an annuity, it's still going to be considered an asset. We're going to use that asset as as a vehicle or a tool in retirement. So I kind of clump it all into with assets for sure. Okay,
good. Well, maybe somebody thinks if they have an annuity, then they're stuck with it. I am stuck with that thing. I opened the drawer, I looked at it, the date on it, and it was, 1999, and I'm stuck with it now.
Yeah, no, you're not. You're not stuck with it at all. So what we look at, or at least if you want to know if you're stuck in, you're going to be stuck in it. If you want to know if it's a good time to actually trade up that particular annuity, there's 4 kind of key indicators we actually tell people to look at.
Okay.
One is what the rates are. If your old fixed or old index annuity is stuck around 2 or 3%, cap, that's obviously going to be lost opportunity for you. Another thing is outdating crediting methods. Older products often limit index options or participation rates, and modern ones track multiple different indexes and multiple different strategies. If you don't have an income rider or some sort of weak guarantee, that's something to actually consider to want to trade up for, because today's annuities offer a far stronger income growth potential, as well as better lifetime payout factors. And also, if you're in or out of a surrender period. So if you are close to, if you've had this account for 10 years, more than likely, especially in Oklahoma, you're probably done with that surrender charge, which means that you can actually move the account and do all kind of different things without any kind of penalties whatsoever.
Okay.
So just like, refinancing a mortgage, probably every 5 to 10 years, you probably look at rates, not to say you would do it, but you still look at rates. Well, I got my rate at 4.25. Now it's down to 3.75. Maybe I should refinance. If it makes sense to do, then it's something you probably should consider. Same exact thing when it comes to annuities.
That's incredible if you look at it through that lens, Todd. I really like that. I'm going to give out your number at this point, 888-548-0409. 888-548-0409. Long Financial Services, servicing OKC. Now, if somebody has one of those metal, file cabinets, creak, and there's those legal folders that have the rubber thing, and you open that, my golly, he's right. I haven't looked at this interest rate since I bought the thing.
Mm-hmm. Yeah, that's correct. As a matter of fact, I have, I've been in this game for 22 years or so. And
yes, you have. Yes.
And I was going through some clients, and actually she emailed me early this month about her 403B, and she, contributions had stopped or whatever it is. So I started to dig in and figure out what happened. And so we figured that solution out, ended up having to get her 457, something different. However, she's like, what can I do with this old one? Which is exactly what I'm considering for what we're talking about now. What can I do with this old 403B that I'm no longer contributing to, that is 16 years old?
Oh my golly.
Right? When I did that, the rates were like maybe 3%. And at that point in time, well, that were great. The indexes were like probably capped at 6%. Well, that was great. Now, when I showed her some options, she was like, oh, so number one, I can get a bonus on my premium, 27%. And my caps are at, I think the caps are like 12% for this particular product. And because it's a product, it's a mix of indexes, like 13 different ones. And her participation rates were upwards of 300%. So what that means is if an index brings in 10% at a 300% participation rate, she's getting 30% credited to her account. So that was completely different than 16 years ago. So things change. Absolutely. Things change. If you have, one of these old contracts, take a look at it, give me a call, and let's really go side by side comparison. Does it make sense to do this or doesn't it? Depends on what your situation may be, but I'm more than likely it's a yes.
Wow. It's an old contract. Some people may want to feel, Todd, that we said it. Now I wanted to forget it.
Yeah.
What would motivate them out of that mindset, do you think? The bonus? I like the word bonus.
Yeah, the bonus. The bonus is absolutely one of them. That's probably one of the biggest motivators, because it's free money. It's the same dollar amount, right? So if you have $100,000 sitting in an account, an old annuity, that same $100,000 can work better for you in a new product that's giving you 27%. That's $27,000 just for doing business. And it's a better participation rate. It's a better cap. It's better indexes. It's better, in other words, better growth and better riders. Some of these riders can attach an extra 10, 15, 20% on the income you actually get out of your annuity. So it behooves everybody to check it out, take a look at it, and really just do a comparison and find out if it's going to be a good solution for you.
I love it. Now, last week on the show, Financial Fast Track, we talked about annuities as well.
Yes.
And so if somebody's tuning in going, wow, I just jumped into this subject matter, for which I'm very unfamiliar and I'm very skeptical. Well, we did a whole show about it, and we do post in podcast form in case you ever want to listen to our past shows. We're like 6 weeks into this, Todd and I, and you can find that wherever you get your podcast. Financial Fast Track. You could go to financialfasttrackradio.com if you'd like to hear all of that stuff. But anyway, we'll get to the other points that we were discussing coming up.
Yeah. So if you're actually listening today and wondering if your current annuity is still the right fit, or you could benefit from refinancing to a higher performing plan, this is your chance to find out. For the next 10 callers, we're going to offer our Financial Fast Track Review, a no cost, no obligation session designed to help you compare your current annuities performance to today's top rated options. See if a 1035 exchange could boost your growth or income without triggering any kind of taxes. Evaluate if newer contracts could lower your fees, increase your bonus, as well as add stronger guarantees. We'll show you exactly how your existing annuity stacks up and whether you can trade up for more growth, protection, or flexibility. Jackie, tell the folks how to get in contact with us.
Sure, my pleasure. 888-548-0409. 888-548-0409. Trading up. That's a great concept as well, especially if there's a bonus in addition to further benefits, right?
Absolutely. It is, I guess, again, it behooves anybody who has an old contract to look at the bonuses. Their bonuses, I think the highest I've seen is 27%.
Golly.
But on average, at like 16, 17%. It doesn't make a difference what that bonus is. It could be 5%. It's more money in your pocket just for conducting business and looking at new annuities. It's always beneficial to make that happen.
Well, and luckily you can show them the whole picture too,
Yes.
to do with their financial plan. Again, Long Financial Services, reachable on this 888 number that we have set up for the broadcast, okay? It's 888-548-0409, 888-548-0409. Be right back with Tod Long.
Tired of financial jargon that leaves you feeling confused? At Long Financial Services, Tod Long offers clear, straightforward advice about your retirement. Understand your strategies, regain control, and get peace of mind knowing exactly where you stand. Call 888-548-0409. Again, that's 888-548-0409.
So we've been discussing something that sometimes could feel like a taboo subject, and that's an annuity. And I think that that's an old reputation for a product that is also old. Tod Long, what do you think about that? Welcome, everyone. Financial Fast Track with Tod Long and Jackie Selby on this side of things. And don't you think that's an outdated fear?
Yeah, it is. Annuities, like I said, they've advanced and changed over the years, especially from the old variable annuities that kept you in a contract for 20 years or 15 years or whatever it is and had all kind of fees associated with it. And you lost your money a lot in those kinds of vehicles. Whereas an indexed product or even a fixed product that are annuities, they don't have those kinds of implications, and they have a lot more flexibility for liquidity. Again, we mentioned bonuses. If just for doing business, you get bonuses on your premiums, better income riders attached to it. So when you start to distribute the money to you, for your portfolio through your portfolio. Instead of $2,800 in some cases, you can get up to $4,000 right out of the thing just because of the income riders. It's just an awesome time to have an annuity, to be honest.
Right, it's a very good time to at least hop on the horn and have a meeting with Tod. 888-548-0409, 888-548-0409. And we have set up a nice landing page if you ever want to hear the other shows. It's Financial Fast Track Radio. Isn't that is kind of quippy? I like it. Yes. Financialfasttrackradio.com. Now, Tod, tell me about who would need an annuity, and what if I have an old one? Is it okay to upgrade, and will this have an effect on my taxes? First starting one and then moving one.
Yeah, good question. There's lots of parts on that question.
Okay, sorry.
Anybody can have an annuity and should have an annuity, and obviously based on what their needs are.
Right.
Folks that are probably, listening is like, yeah, I got this money and an annuity. I don't want to have to change it or move it for very different reasons, whether it be the guarantees or whether it be taxes. Well, if we use what's called a 1035 exchange, a 1035 exchange comes right from the IS code. It's section 1035, actually, to be exact. It allows you to move from one annuity or even life insurance policies that are cash value into another one without triggering a taxable event. So your gains all roll over tax deferred, your principal stays intact, and the clock keeps ticking on your compounding interest that you're getting. So that's what this whole thing is about, is exchanging these products instead of cashing out. Or if you cash out, that's a taxable event. We're not doing that. We're exchanging one contract for another contract. That means all that money, all that compounding interest, et cetera, it just gets transferred to the new contract. That's what that is.
It's interesting that these things have changed so much over time. And luckily, you've been in it long enough to see a lot of changes. Long Financial Services is Tod's company. And by gosh, you've been doing this, is it 22 years in financial services?
22 years, yeah. I'm working on my 23rd year now. That's
pretty exciting. From professional athleticism to to working with money. But it seems like a natural transition for you. Your father was also in financial services, and he was a runner as well, right?
That's correct. Yeah, following the footsteps.
That's very fun. I like it. But it seems like it takes a lot of focus and a lot of fuel to concentrate on this subject of personal finances, for people in their retirement, or you don't have to be retired for sure, but planning for the years when that paycheck is not coming in. That seems like a really hard study for a person like me, because I've been studying something else, all this time.
No, it makes sense. And honestly, the technology has helped me out considerably nowadays. A lot of things that we're talking about, I was doing it manually, 10, 15 years ago. But now I got so many tools that I plug in information and it gives me great analysis. It gives me great plans. It gives me everything. So yeah, technology has helped me tremendously to utilize all kinds of different strategies that are out there that I may not know about, but guess what? Some of my tools do. And so those things, if I understand it and I can present it to my customer, then and everybody's happy.
We're kind of talking about upgrading your annuity at this point, but that doesn't mean somebody can't talk to you about getting a new one, starting from scratch.
Yeah, absolutely. We can start from scratch.
Yeah, what the benefits are to that. I mean, it's just suitable. It's not like if you call Tod, he's going to suck all the money out of your account and put it into an annuity. It doesn't work that way. There's suitability and there's all these things. He wants to look at your entire picture.
That's correct.
To make sure that when you're ready to retire, that you're going to be funded.
Right. So one thing I'll make a distinction on, a lot of folks assume that if somebody talks about an annuity, they're thinking all of their investments has to be pulled out of those investments and put into this annuity. So annuities aren't, well, they can be designed that way, but I don't present them that way, or I don't position them in the portfolio that way. Annuities are in addition to your investments, right? They enhance your investments, because technically what you want your annuity to do, especially in retirement years, is your annuities should pay for your housing. If you got cars, you get groceries, your trips, those kinds of things. That's something that's consistently coming into you, and that money can be used to pay those consistent bills you have. That way, you allow your investments that are in the market going up and down, et cetera, allow that time to breathe. So if the market does go take a dive, well, you don't have to take money out of it, because you have money coming in elsewhere. So you don't have to time the market on your exit from the market. Just let it sit there and let it breathe. Now, once we start doing a real financial plan, we'll understand what are your allocations, how much is in annuities versus how much is in the market, et cetera. We'll look at that, your risk tolerance. That's one of our things we do in our financial fast track reviews, is your risk tolerance, to make sure that everything is balanced in your portfolio. But yeah, annuities just enhance your overall portfolio is what they do.
Tod's number is 888-548-0409. Let's get some enhancements. 888-548-0409. Because you touched on something. This is a guaranteed income in retirement, in other words.
Yeah.
We want to have some money coming in besides our Social Security.
That's correct.
Certainly. So we can build an income with our own assets?
That is correct. We talked about it last week. It's really a personal pension. So what you're creating is like you're putting a lump sum of money at a insurance carrier, and that insurance carrier is going to guarantee you a certain amount of money coming out. That's what annuity is. Honestly, that's what a Social Security is. That's what pension is. That's the same exact thing, the same concept. You're just doing it for yourself, and you're doing what it's. I dare I say it's a lot better than like a Social Security, because you're in control of it. You can really look at the indexes and find out it's like, you know what, that index looks good. I want to have some of my allocation in that. We can do that. Social Security can't do that, right? Pension, you can't do that. So I know they're trying to, thought about a long time ago to try to do that, but they've never done it. But you can do that with a fixed index annuity.
Very interesting. Yeah, Bush too tried that.
Yes.
And then boom, 9/11 happened. Oh, devil.
Yeah.
So
honestly, I was looking forward to it. I was looking forward to that, actually. I was like, oh, I have control of some sort of my Social Security. That sounds interesting.
Because they're not managing it very well.
Not very well.
That trust fund.
Not very well. But you can manage your own, though. You can do your own.
Yes. And we can refinance. We can reposition. We can exchange.
Yes.
All right. So do you want to talk any more about the 1035 exchange? Like, what's the right timing on this?
The right timing 1035 is really, is when I start to do an analysis on someone, so you understand where I'm coming from.
Yes.
If they have an annuity, and I know that they've had it for like 15, 16 years, et cetera, technically any annuity that I do is going to be a 1035 exchange, because I don't want to have them have a tax event, period. So it's part of the paperwork. When I pull up a packet, the packet's going to have a 1035 in it. It's an easy 2-question answer type thing. We make it a big deal, but it's not. And the only time I don't have to do a 1035 exchange if I'm doing a 403b or 401k rollover. Those I don't have to do because it's not an annuity that they're in.
I see.
A 403b can be an annuity. Most contracts with teachers are from insurance carriers like, National Life Group, North American, et cetera, et cetera. They have, all they do is 403b type stuff. And those are all index annuities or fixed annuities. Whereas 401ks aren't that. 401ks are in the market.
Right.
And so if I'm doing those, it's just a straight up application with no 1035, but every annuity is going to have a 1035 on it.
Well, if you have one, call Todd and talk it over with him. Get this thing refinanced.
Yeah. So if you are listening right now and wondering whether your annuity is still doing the job you hoped it would be doing, this is a perfect time to find out. For the next 10 callers, we're offering our Financial Fast Track Review. It's a complete, no cost, no obligation session designed to show you how to upgrade your existing annuity through a tax-free 1035 exchange and compare your current performance against what's available today. We're going to uncover hidden opportunities, since many older annuities are earning around 2 to 3%, while newer contracts offer higher potential growth, upfront bonuses, and stronger income guarantees. We're going to eliminate unnecessary taxes or fees by walking you through how to make the move correctly so you keep your tax deferral intact. We're also going to create a clear strategy that blends safety, income, and growth so your money works harder without adding risk. We'll also include a personalized annuity performance report showing you what your current annuity is earning, what a modern exchange could do for you, and how much more guaranteed income you could generate over time. Most people never get this kind of side-by-side clarity, and once they do, it's eye-opening. You might discover that your existing annuity is right on track, or that it's time to trade up or start earning more on the same dollars you already have. Again, that's a review at no cost to you for the first 10 callers today. Jackie, tell the listeners how to get this.
Sure, claim this. There's no charge, no obligation. The first 10 at 888-548-0409 with Tod Long. 888-548-0409.
Feeling like just another number with your advisor? At Long Financial Services, you're always valued personally. Tod Long knows your retirement isn't about numbers on a page. It's about income you can depend on, security you can trust, and advice tailored specifically to you. Take the first step toward a meaningful conversation. Call 888-548-0409. Proudly serving Oklahoma. Again, that's 888-548-0409.
The show is Financial Fast Track with Tod Long. His number is 888-548-0409. If you'd like to talk to him. What about this decumulation phase? I mean, we've worked all this time and we want to use the money that we saved, right? How do you frame that with your clients?
Yeah, so I look at I think people should look at how I kind of describe it. Your retirement income going through three phases, three approaches. One's accumulation, one's preservation, and one's distribution. And so in our working years, been working for 35 years, start when you're 25 years old, et cetera. You've been taught to save, which is absolutely correct. You should. Most brokerage houses, et cetera, wire houses, they're accumulators. They're going to accumulate the money, and they do really, really good at that. That's awesome. And we've been talking about annuities. And so one of the ways I use annuities is in the preservation bucket, because once you get to a certain age, typically it's 50, 55, you want to start to move that money over into a preservation state, because you want to keep the money that you've actually acquired or accumulated without any kind of risk. Right. And that's where those annuities come into play, fixed index annuities, et cetera, et cetera. Those things happen. The last piece of it, which if you set up correctly, and this is the reason why I use annuities, is that I can start to distribute that income in your distribution phase. That's your income riders. Going from, I just mentioned earlier, $2,800 to $4,000 because of the income rider, 20% attached to it. Modern annuities have these great riders attached to it to make that happen. So that's what the last bucket is distributions, making sure it's done in a tax efficient manner, to where you're not being taxed erroneously when not necessary.
Right, because because we could be subject to a lot of tax issues if we have a great big fat IRA that we've never touched.
That's correct. Yeah. So yes, you may start to look at timing on trying to move money out of a traditional IRA, which is qualified. We haven't paid taxes on it, into a non-qualified or Roth type of account. And so we do systematic rollovers. So if you have a certain amount of money and you're at a certain age, we make sure that we try to get that traditional IRA reduced as much as possible before RMDs start to hit, or your required minimum distributions start to hit at 73. And so if we can get that reduced down, then your tax burden starts to decrease. But based on the plan, again, doing a financial fast track review, we look at all that. We look at where you're at right now, if you're 65, 67 years old, et cetera, where your RMDs are going to start to hit. Actually, we look at IRMA as well. So that's your for your Medicare, your premiums can kind of go up and down based on how much income you actually make. We look at all those different things to make sure that you start to distribute your money, no matter if it's qualified or non-qualified, in a tax efficient manner.
Very good. I like this. For your retirement savings, there's accumulation phase, the preservation phase, and the distribution phase. And folks can get in and talk to you about all of these things, and the sooner the better, right?
Yeah, absolutely.
Just like Jason in the last segment, he wanted to know, does he have to wait till he's retired to start an annuity?
Yeah, not at all. You can start at any point in time. As a matter of fact, I have there are some annuities can start. I've done this myself with my grandchildren. Start at age 0. And start to make those accumulation buckets. It's a winner when it comes to passing wealth to grandchildren.
Boy, those are some lucky kids. Here's Todd's number, 888-548-0409, 888-548-0409 on Financial Fast Track with Tod Long.
Retirement means a new phase of life, and managing risk is crucial. At Long Financial Services, Tod Long and his team build comprehensive strategies designed to minimize risk, generate reliable income, and help you stay proactive through every market condition. Discover what your retirement plan could look like. Call 888-548-0409. Again, that's 888-548-0409.
This is the modern era, after all, so we might as well talk about modernizing your annuity. It's a refinance process, and you've got the expert here. It's Tod Long, and his firm is Long Financial Services. It's financial fast track. In other words, he's going to get you in, talk to you about it, and by golly, be able to give you some answers pretty straight away. But I know that after today's show, almost anybody could benefit from refinancing their gosh darn old annuity.
The reason being is that the evolution of annuities has been dramatic. I want to say over the past 10 years, but if I look back, it's probably been a little bit longer than that. But a lot of the changes have happened in probably in the past 4 or 5 years that are really, really awesome. So years ago, annuities were like fairly one-dimensional. You pick between a fixed, variable, or an immediate annuity. But today, there's just much more sophisticated. So we have the fixed index annuity, FIAs we talked about last week. They're my go-to, and a lot of retirees use it as their way to minimize the downside and actually increase their growth potential. So instead of locking into a one interest rate, your growth can be actually linked to multiple different market indexes, like the S&P 500, NASDAQ blend, or volatility controlled indexes, and you never lose a penny if the market does bad. One stock, I had a client that actually had, I want to say 90% of her stock in Apple. Now, granted, it's a great stock, but 80 something, 90% or something like that in one stock, that is not a good mix at all. So yeah, you got to start to think about how you want to move, your portfolio to a more blended, more diverse type of approach. UPS. I read that this morning. I didn't know that until this morning.
So many people are getting, these companies that.
Yeah. I think Amazon doing something like that too.
Right.
20-something thousand.
Right. It's just madness to think that these companies aren't going to get absorbed too, otherwise. And so to use the leverage of an insurance company so that you have that guaranteed income, so you don't have to look at that. What you can look at is what you're going to do today and how many trips to Costco you're going to make this week.
Right. Yeah, that's true. I will say that one of the biggest breakthroughs in modern annuities actually is that income flexibility.
Okay.
So you don't have to give up the growth to get lifetime income anymore. Modern contracts actually offer stacking roll-up rates, sometimes around 8% or more, plus multiple payout options for spouses. So some even include enhanced benefits for long-term care as well as chronic illness. So your income can actually increase when you actually need it the most. And if you have ever quoted or looked at the price points or premiums on a long-term care contract, having these riders on something that, again, a chunk of money you're going to give to an insurance company, and it's a small rider you're going to attach to it that has some long-term care type of options in it, is wonderful. Something you should consider, because it's not going to break your bank at all.
It can't be overstated, especially if you have an older annuity contract in that file cabinet over there that you haven't looked at in a very long time. Because back then, maybe when we were a little bit younger, we weren't so worried about what was going to happen in our older years, whether we're going to need assistance or, nursing homes were for people who were really broken down or old. And, when you bought that annuity. But now, boy, wouldn't it be nice to have some protection?
That is absolutely correct. I was telling you a story about one of my clients who is 51 and her parents are in the early 80s. I think her mother has Alzheimer's or dementia, one of the two. I'm not quite sure which, but they didn't have long-term care. And so she had to sell her home. Now she's living with them, and she's now a caregiver as well as working remote and everything else. She got long-term care at an early age because her parents didn't and was experiencing issues. So she did it the right way.
Oh, good.
A lot of folks don't. And so they either tend to I've seen the worst case scenarios is that they have to mortgage their house. They have to sell a lot of stuff just to pay for some medical expense that they didn't know was going to happen. Or one of the members of the spouses have a long-term care issue like dementia. And that means you have to have folks come in and help and whatnot. All that costs money. And if you don't have a plan for that, then that's very, very problematic financially. Mm-hmm.
I know, Tod, you can help people work this out and have a look at things. And that's the whole idea that's why we're on the radio. Mm-hmm. Tod just wants to plant the seed in your mind that there are solutions for this. And so many Americans are watching their parents go through this, or assisting parents, or in my case, sibling. My sister's taking care of one of my older brothers. Mm-hmm. At this point, he had no plan put together.
Right.
So my sister is it. And so she take care of him as long as she can. But for those who are listening and and have witnessed this, it's a good idea to have somebody, a professional, look at it for you, because maybe one of these annuities you could turn into something that could be beneficial for yourself. 888-548-0409, because that's one of the new features, isn't it, Todd? 888-548-0409 is a rider to take care of long-term care.
Yeah, that's part of it. Plus the chronic illness riders that are attached to it.
Chronic illness, thank you.
Yeah, chronic illness. Yeah, one thing that modern. I will point this out. I probably mentioned it earlier, but I want to point it out again. Is that modern annuities shouldn't replace your investments.
Should not.
Flat out. Yeah, should not.
We're not saying that.
It should balance them.
Okay.
Right, which is completely different. So, how we use them is we create what we call a kind of an income foundation. So the foundation covers like your essential expenses, like your housing, your healthcare, groceries, travel, some travel, let's just say. So you can let your other investments, the stuff that's in the market, a time to breathe. It's going to grow without any kind of worrying about timing of the market. So you can take money out when you want to take money out versus I got to time it correctly. So when your income is covered for life in one of these annuities, you can stop stressing about everyday market swings.
Wow. That's heavy. Let that settle in for a minute.
Mm-hmm.
You don't have to, because all the things that we're hearing, all the things they're building and what's going to happen with AI and all these things concern the average person who's invested in the market, which is inflated by high-tech stocks at this time.
And if we just talked about it, UPS is laying off all these folks. And all those folks are going to be impacted somehow financially.
Yes.
Right? If they have some sort of annuity that's socked away, that's earning the interest, is earning all the different indexes, et cetera, when they get to retirement, well, that portion of their portfolio is set. They're going to have income for life. It's guaranteed income for life because they set it up appropriately. Now, they still have, if I don't know how old they are, they could be 51, 52 years old, at which point, they'll still have to get a job and still work. But the majority of their retirement income, that retirement paycheck we talked about a couple of shows ago, that's going to be still intact, even though they got displaced from UPS or Amazon, whoever's laying off folks.
Mm-hmm. All these people, both. Mm-hmm. Why is it different? Can you just make the distinction between what an annuity is? It's an insurance product, but it's also a savings, right? It's a savings vehicle, as opposed to the market. We think that's the only way to have a retirement is using the market, don't we?
Right. Yeah, a lot. Yes, to answer your question, and that's because of marketing.
Yes,
marketing's done that for folks. But annuities can be. Now, I just mentioned that we don't have to replace investments with annuities. But what I have done in the past, if somebody did not have investments, then guess what? I can use all kinds of different insurance products to actually have a full boat retirement plan complete without in investments. So investments, as you mentioned, what the distinction is, investments, I'm taking $100,000 and I'm going to go buy stock, whether it be mutual funds or direct stocks, Apple, Amazon, Google, whoever, and you're buying those companies, if you will, a portion of those companies. So now I'm in the market. Now there's, all kind of different indexes in the market as well that you can actually put your money in. But if you put money into that, it's still kind of like a mutual fund. I'm still buying those stocks. I have ownership in those companies. And an annuity product, at least in an index annuity specifically, I'm not buying a stock. What I'm doing is I'm putting money into the savings vehicle, as you mentioned, and the insurance company is going to look at those indexes to determine how much credit they're going to put into my account. If it's 10%, they're going to if I put $100,000 in, I'm getting 10 grand from that.
But it's not going down.
It's never going to go down. Never going to go down. And that's the whole beauty about these index products, or index annuity products, is that there's no down risk. There's no risk involved.
So what you're saying is there's more flexibility for the consumer, for people in my age group, for anybody really. Yeah. At this point in time, whether you're, 40, 50, 60, or 70.
Yeah, I'll tell you a quick story that will sum this up, I think. The story was from a couple in their mid-60s who had two old annuities, one fixed, one variable. The fixed one was barely earning about 2%. I think it was like 1.9 or something like that percent. And the variable had lost value twice in the past 5 years. So what we did is a 1035 exchange to consolidate them into a single fixed annuity with a 25% premium bonus and a 10-year income rider. their guaranteed income jumped from $2,800 a month to over $4,000, and they eliminated all of the market downside. And it's the same dollar. It's just better structured, give them more peace of mind. That's what a retirement tune-up looks like. It's actually taking what I have. What do I have? I have $500,000. What can we do with this to make it better? And that's all we're doing. All we're doing is that right there.
I want my financial fast track review.
Yeah. So if that story sounds familiar, maybe you've got an older annuity collecting dust in one of those shelves that Jackie just talked about, or investments that aren't really producing consistent income. This is your chance to see what's possible. For the next 10 calls, we're going to offer our financial fast track review, a comprehensive, no cost, no obligation session that helps you identify which of your existing contracts are underperforming and which ones can be upgraded. Discover modern annuity options that can provide you more growth, more income, and more flexibility. See how a 1035 exchange could consolidate and simplify your plan without creating taxes. Build a personalized retirement tune-up plan showing you exactly how to turn your savings into lifetime income you can't outlive. We'll even include a bonus performance comparison report showing you how your current plan stacks up to all of what's happening today. It's one of the most eye-opening sessions we do, and it's provided at no cost for the first 10 callers. Jackie, tell the people how to get one of these.
Sure. It's 888-548-0409. Don't be shy about using the 888 number. We have this set up just for the show. All right. Servicing, OKC. This is, we're right here, and you can just use this number, 888-548-0409. Call Tod Long, and we'll be right back with some questions and answers.
Is your retirement plan starting to feel generic? You're unique. Your retirement strategy should be too. At Long Financial Services, Tod Long customizes each plan specifically around you, your life, and your goals. For a personalized review of your retirement, call 888-548-0409. Proudly serving Oklahoma. Again, that's 888-548-0409.
Hey, welcome back to the show, Financial Fast Track with Tod Long. Tod was a Sooner sprinter and also a sprinter professionally for the brand Nike. That must have been some fun times. So was that 25 years ago?
Yeah, it was fun times. 25 years ago. That was a little bit longer than that. Goodness gracious. It was, yeah, 'cause 25 years ago, I just moved to, here. So yeah, I would say that was probably almost 30 years ago.
Wowie. You run on, what was the type of track that people run on now?
Mondo surface, yeah.
Mondo surface. And that is constructed out of tires? What is it?
Some sort of rubber, yeah.
Rubber, yeah.
Yeah, it's a harder surface, obviously, than dirt.
And it's a stable surface.
Yeah, it actually, even now, I think the Mondo is actually has more tech in it to where it actually gives back a little bit more energy into when you strike the ground, versus when I was running it. Granted, it did a lot more than what my dad did.
Your dad did,
yeah. But now it's really a give and take. I'm going to strike the ground with a certain amount of force, and that force is going to it's going to springboard me. Basically, is what I'm trying to say. Yeah.
Speaking of spring, now one more question about sprinting, if you don't mind, because I'm such a novice until I met you. Really, when I watch, on TV, your feet are moving so fast you can't even see it. It's amazing to me. But when you're hitting a hurdle, do you use more force in your step to get over the hurdle or less to fly? Does that make sense?
Good question. I'm not a hurdler, so.
Oh, I'm sorry.
Yeah, no, that's fine. I
thought you did the hurdle in the relay. No.
No, ma'am. No, not
sorry.
at all. I'm a straight up sprinter. 100, 200, 400 meter.
Sorry.
Really, don't get me talking about some hurdles.
All right.
I probably can answer the question. I think when you generate the force on the ground to lift, yes, you are generating more force to take off. Yes, to answer your question. I just don't do it. I was always scared of hurdles, to be honest. I don't want to mess with them.
Right. Well, you don't want to get hurt.
No.
Yeah, the people who do the hurdles, I think they're just the most supreme athletes. I really do.
Wait. No, the sprinters are supreme athletes. Come on.
The sprinters.
What are you talking about, Jackie?
I'm digging a deep hole, folks. I'm digging a deep hole.
What are you saying?
Well, but then on the other hand, I like hockey players and baseball players. So forgive me. All right.
Okay. Well, if I was to pick the athletes at a track meet, it's the multi-event people, the decathletes. They're the athletes.
The decathlon athletes?
Oh my God, yeah. They got to have speed. You got to be able to throw. You got to be able to jump,
leap. Yeah.
Leap. They got to do the hurdles. They got to do everything. They got to 400 meter, 100 meter for men. I think it's 200 meter for women. They both have 100 hurdles, and they have to do long distance. They have to do jumps. They have to do pole vault. They have to do javelin. They have to do shot put. I think discus too. They got to do a lot.
There's so much more tech now involved, isn't there, in the sport in general, in all sports in general. And we've been talking about the old annuities, and I just like to equate this to, the older 30, 40 years ago, people nutritionally, I found out the two things that people used to drink. Maybe you don't know these, but Carnation Instant Breakfast.
Yes, I remember that one.
And Slim Fast.
Yes, of course I remember that. I'm not that young.
You're not that young. But you probably didn't use them.
I did not use them, no.
No.
I'm very familiar with them, though, yes.
Yeah.
Yeah.
I was trying to think about that at the beginning of the show. My sister, I had to get her off Slim Fast like 3 years ago. I'm like, you got to get some protein powder because the tech has changed.
Wow, that's a long time on Slim Fast. I didn't think it was still around.
Right? It's so bad for you. It has all the corn, soy, whatever.
Yeah.
I don't know if they still make it, but anyways, the tech has changed, and so have the annuity products and the tech in all sports. Gosh, watching the World Series was a lot of fun. I don't know. We could talk about that all day, but we have some questions. And I have a question from Carol for you.
Okay.
And she says, I'm 74. I drank Carnation Instant Breakfast. That's where I came up with it. She says, my annuity is over 10 years old. It's earning about 3%. Am I too old to refinance or upgrade an annuity?
Good question. And Carol, no, you're not too old. The key is actually the strategy just has to change. At this stage in life, it's less about maximizing the growth and more about improving income and flexibility. So many people that I've experienced or worked with that are in their 70s actually have annuities that are out of surrender periods. So what that means is you can actually move to a stronger contract without paying any kind of fees or anything like that. You have better payout factors, have better liquidity without any of the penalties. So because newer contracts are obviously much more efficient, I've seen clients actually increase their guaranteed lifetime income sometimes by 20% or more simply by upgrading strategically.
Wow. She says, thank you very much for that information. She said we used to drink Carnation Instant Breakfast because it tasted like chocolate milk.
You must as well go and drink chocolate milk then.
Might as well, or strawberry milk. But the parents were like, no, this is better. All right. Carol, thank you so much for the question. Todd's available on this 888 number if you would like to hash it out with him. 888-548-0409. Tell him, I want proof. 888-548-0409. Long Financial Services is his firm. All right, let's go over to Roger. He says, I want to move my annuity now. Do I lose my current guarantees or can they transfer to a new one? This is a good question, I think.
It is. Yeah, it's a very common question, and it's actually an important question to understand. When you move from one annuity to another, your old guarantees end. But the goal isn't to lose the guarantees. It's actually to replace weaker ones with stronger ones. So think of it like trading in a car. You're giving up the old warranty, but the new one's going to cover more. It's going to run longer, right? So we always run the math to compare what you have right now with what you're going to get. Whether compare the roll-up rates, compare the income multipliers, the spousal options. We look at these things side by side. So if the new contract improves your guaranteed income or flexibility without adding risk, that's a win. Take that win and run.
Sure. And you can help people assess this, whether it's going to be worth it or not.
That's correct.
Because,
I was going to say, we talk a lot to customers all the time, obviously, but when we see an opportunity or see something that, hey, you know what, it'd be advantageous if you used to move it to this particular product or this particular annuity, we immediately show a side-by-side comparison. And that way you make it, I kind of like you, I'm going to give you all the information on the table so you can make a logical decision based on all the information. So if you don't have that comparison, or you can't see that comparison, then you're just making a decision in the dark. And a lot of variable annuities back in the day, you made decisions in the dark. And so I don't do that. I show you all this information. It's clear. It's understandable. It's not crazy jargon or anything like that. And you can make a logical decision that's best for your financial picture.
Very good, Roger. Thank you so much for the question. And you can call Todd, 888-548-0409, and get on the schedule with him for no cost, no obligation. He says that at the end of each segment, 888-548-0409. And that's one of the reasons that he does the job that he does, because he can do so in a fiduciary manner. He's going to act in your best interest, not in the best interest of the product or the best interest of the home brand or the best interest of the one car he's selling. Gosh, car sales. Back in the day, they used to try to take my car keys when I walked onto the lot.
Yes.
Can I see your car keys? And they don't give it back to you signed. I mean, it was bad for women. Bad.
It was bad in general for car sales back in the day. And one thing I'll mention, you mentioned that I don't really go towards a home team, a home product or whatever. And that's true.
Right.
As an independent advisor, I have access to over, 5,000 different annuities. And that's why I use a lot of tools to be able to filter out the things that I don't want to see or don't need, or just not going to be suitable for my client. So after I do a suitability study, I determine, okay, which products or which annuities would fit this particular scenario. So in each scenario is different. So Jack, if I did a suitability study for you, it's going to be different than I did for my client 2 days ago. It's just going to be different. And so the annuities that are being presented are going to be different. And it doesn't make a difference who. I'm agnostic when it comes to the carriers or the products, et cetera. It's really about what's going to be best for my clients ultimately. What's going to maximize their dollar amount, whether it be, Todd, I want a big bonus. Okay, well, let me go try to find a big bonus for you.
Right.
If it makes sense.
Love it. And of course, there's so many carriers, if you will, insurance carriers, and you just use the A+ ones. A+
ones primarily. I mean, there's sometimes that they're B++.
Oh, that's
that I've used before. But primarily I use A+ carriers, and there's lots of them. There's tons of them. And provided the fact they have the right product for my client, then they will get presented. If they don't, then they won't.
B++ was my average in college, and I thought that was pretty darn good. I'm not an A+ student like my siblings. All right. Feel free again to call Todd at 888-548-0409. When my sister hears this, she's just going to call and say, why are you talking about me on the radio? 888.
That was a positive thing, though.
Yes, it was.
Yeah.
Yep. Not the Slim Fast, but okay.
Yeah, right.
888-548-0409. Gosh, I can't believe how quickly we burned through those questions, Todd.
Yeah. Those are good questions. I appreciate everybody writing in and asking those questions. If any of these questions sound like ones you've been wondering about, whether you're trying to understand your current annuity, debating an upgrade, or figuring out how annuities fit into your retirement income or picture, this is your chance to get clarity. For the next 10 callers, we're offering our Financial Fast Track Review. It's completely free. No charges, no obligation. It's designed to help you review your current annuities, performance, and guarantees, compared to today's most competitive options for growth, income, and flexibility. See if a 1035 exchange could actually upgrade your plan without triggering any kind of taxes. Get a personalized retirement tune-up report showing exactly where you stand and what improvements might make sense. No pressure, no jargon, just clear answers about whether your money's working as hard as it should be. Jackie, tell the folks how to get one of these spots.
Here's the number. It's really easy. 888-548-0409, 888-548-0409. And in 2 seconds, can you tell Jason? He's asking, can I get an annuity before retirement?
Yes, you absolutely can. Annuities aren't just for retirement. Right. You can get them anytime you want, to be honest. I often use them for pre-retirees like Jason, who, wants to accumulate safely and build an income base for later on. Think of it like locking in your retirement income early So while you're still working and contributing to your 401k, you can actually position a portion of your savings into an annuity that compounds tax deferred, builds guaranteed income credits year after year. By the time you retire, that income base could be significantly larger, and you'll know exactly what you can do and what you can count on for the rest of your life.
888-548-0409.
Investment advisory services offered through Tod Long, a registered investment advisor. During this show, Tod Long provides general information, not individually targeted personalized advice, and is not liable for the usage of information discussed. Exposure to ideas and products or services should not be considered investment advice or a recommendation to buy or sell any of these financial vehicles. This information should also not be considered tax or legal advice. Individuals should consult with a professional specializing in the fields of tax, legal, accounting, or investments regarding the applicability of this information for their situation. Past performance is not a guarantee of future results. Investments will fluctuate, and when redeemed, may be worth more or less than when originally invested. Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not in any way refer to securities or investment advisory services. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and are offered through Tod Long. By contacting Tod Long, you may be provided information regarding the purchase of insurance products.